So I have come to the conclusion on all things digital, the best way to look at it, and I've said this several times, Bitcoin is not a coin, it's software. What I do is I say to myself, I've seen this movie before. I was an investor in software, engineers 22 years ago at the Learning Company when we made educational software. So the way I used to do it then is the way I'm doing it now. I'm a very lucky guy. I can make a phone call and it always gets returned. That's the whole Shark Tank thing, and I get all that. But if I want to invest in Polygon, I want to meet the engineering team, which I did in Dubai. I called them up, met the team, heard their vision of what they're doing, looked at the economic reality of the outcome, the potential of it. So first is team. I want to meet the team. If I check the box on team, smart guys, good engineers, good strategy, good group, I'm interested. Here's the test, the second test. What economic value are they creating? In the case of Polygon, let's stay on that Polygon for a second. Aggregating transactions to reduce gas fees on ETH is a smart idea. There's a reason you would do that because you have an economic reason to pursue that. You save money. Transaction fees are less. So I think the potential of that is large. HBAR, okay? Great team, good engineers. What's the economic premise that would keep that growing? Well, Boeing wants a quasi-centralized, decentralized platform. They want the best of both worlds. HBAR can deliver that. Check the box there. Buy into that one too. Look what's going on with, Solana. I mean, they're trying to solve problems a different way too. Speed everything up. Check the box. Who's working on that? Sam Bankman-Fried and his team. Why wouldn't you bet that horse? So it's all about getting positions in all of these, software platforms. That's what they are. They're software platforms. So I say to institutions, you criticize me for investing in Bitcoin. You own a big position in Microsoft. You own a 5% weighting in Yahoo. What is that? That's software. Why don't you do the same thing in Bitcoin? Why don't you do the same thing in Ethereum? Why aren't you in HBAR? Why aren't you in Polygon? Why aren't you in Serum? Why aren't you in Helium? Like, it's all software. And so with that attitude on, it's hard to say, I'll only invest in publicly traded software companies. One day these, to me, and I really believe this, one day crypto and all these software platforms are going to be the 12th sector of the S&P. And I'm just taking the bet now that we're on our way there, and I'm taking and staking my bets now. Broad portfolio. No one, Ethereum is my biggest position right now. Bitcoin's had a bit of a correction, I get it. But there's been volatility. But now, to offset that volatility, I own an exchange. So I want to own more exchanges. I look at it, it's all software.
John?
Kevin, yeah, thanks for coming on. You talk about this industry being the 12th sector of the S&P. And recently, Jerome Powell said that their report on crypto and CBDCs is coming out soon. What are your thoughts on the impact that report can have? And what do you think that report will contain?
I'm encouraged by that report because it shows that they're inching forward and they're trying to do it right. My opinion about the regulator is they understand the tremendous potential of this technology, the potential of streamlined payment systems, the potential of productivity that blockchain has in smart contracts and all the case uses for it. They get it. But at the same time, they're well aware that when they rule, it will be the global standard. The Chinese aren't going to do this. No one's going to follow them. They're going to follow the SEC. They're going to follow the US regulator. So they want to get it right. The first place I would like them to get it right would be on the baseline stablecoin as a payment system. I would very, very much like to be able to transact globally, pick a coin, my preference is USDC, but pick one, regulate it, and let me, as an investor, along with hundreds of millions of other investors, use it as a form of payment and stability. It would be fantastic if it was backed by the US dollar. They know that. They know that. It would just be so much more efficient and so less expensive. If I could just transact, maintain a centralized or decentralized wallet, and just be able to, imagine if I could buy a Swiss stock with a stable coin instead of having to go US dollar into Swiss franc, buy the security, then back into Swiss franc, back into US dollar. You know how screwed I get doing that? How much friction there is and how much I lose? It's insane. Same with euro stocks, same with British pounds, same with Canadian dollars. I mean, I invest in all these jurisdictions and I have to deal with that. And so it's sort of, that's where I think we want to go first. Once they rule on that, everybody will say, okay, we're moving in that direction. It'll be very constructive for the asset allocation you talked about at the beginning of the hour on institutional follow through into crypto. There's no question, you're right. There's a lot of demand. They just need the regulator on board.
Kevin, what's interesting?
There's going to be 4 or 5 currencies that will be digitized. So there will be a digital version of the Swiss franc. There will be a digital version of the euro. There will be a digital version of the British pound. There'll be a digital version of the Canadian dollar. There'll be a digital version of the US dollar. It may be a stable coin in that case. But the reason I think that happens is you allow the economies to compete with each other on productivity and interest rates. So that if I'm going to go buy something in Switzerland, there'll be a spot exchange price from my USDC or whatever the stable coin is into the stable version of the Swiss franc. And I may elect to keep a portfolio, as I do today, of multiple currencies because basically I want to own Swiss francs. That country is very, very efficient. It's a very good currency. They don't have a lot of debt. So how do I own the digital version of that? Because right now, if you want to own native Swiss francs, you practically can't do it. Because if you want to open an account in Switzerland as an American citizen, you can't. You can't do it. They won't open it for you. I think all of this political border stuff goes away with digitization of the currency. So I'm very optimistic for that. Now, the reason you'd only have 4 or 5 of them, Chinese yuan, yeah, that's going to be digital at some point. Now, would I own a Chinese yuan? Probably not if the government's watching, my wallet address, and it'll be an unfavored currency for that reason. But I'd happily own Swiss francs, happily own the digital American dollar. It's going to play itself out. But you're saying, if it happens, 100% it's going to happen. It's just when. If we just digitize our dollar, or we got a stable dollar like a bank, if Circle became a bank, I don't need anything else. I'll just own that and I'll piece it off digitally whenever I need to buy some other kind of asset. And I'll be staking it at whatever the current rate is. I'll be rolling my contracts. And just like in the old days when you could make 5-6% interest, which we don't get anymore. And so I think there's a really big use case and why there's so much pressure on the regulator to rule on this thing. And you guys are dead right. The efficiency brought forward is just insane. It's so powerful an economic reason to pursue this.
Agreed. Last question, then we'll let you get back to Miami Beach, get a little tan going because it's 70-something degrees here for anyone who's stuck in New York at 12-degree weather. When you think about your portfolio, I think previously you were kind of 2, 3, 4%. You had aspirations, but not quite at, I think it was like 8%, 9%, somewhere in that range is what you were kind of targeting. And eventually you said that you could see going up to like 20% in a single sector, but that would take some time to get there. Where are you today, and how have your thoughts around kind of portfolio allocation percentages? How has that changed since the last time we talked?
At year end last year, we thought we'd be at 7. We were at 10.7% in the operating company portfolio. And today, just this morning, I got off with our compliance guys. Because of our recent investments, additional investments in some of the equities that we bought, I increased my position in Hold, Immutable Holdings, the Jordan Freed company that owns NFT.com. I bought more of that, and I also bought a lot more of on the deal of that WonderFi did, buying blockchain or buying BitBuy. We're now today at 16.5%, and so we're on our way to 20, and it happened really, really fast. And I'm comfortable with it. It's more volatile than our traditional book because when you look at what else we own, it's commercial real estate, it's large cap S&P companies, dividend payers, a lot of them. This stuff is volatile, but the underlying potential and the growth of it, and I know that a lot of institutions are going through the angst I'm having. I can't find better opportunities than these companies. Like they are really, this is like investing in the earliest days of the internet, the earliest days. because we're in the first inning of this stuff. And so you have to find your opportunities where they are. And you know, probably by the end of this quarter, I'm going to be at 20%. That's what's happening here. No, you're right, but that is the way the mandates work out there globally, and sovereign and pension and everything else. You know, it's sort of, one of the challenges I've got is I have to include my holdings and my contracts on USDC as basically an equity, as I said earlier, which to me is frustrating, because I would, you know, I can't get past 20%, but it should be treated like what it is. It's a currency where there are no rules like that. But we're not there yet, and it's a push. I will say one thing in closing: watch what happens this year in the amount of capital that comes into that new mining model. That we're going to solve this ESG problem in 2022. You're going to see a lot of institutional capital come into this idea of mining within a community, supporting a community, doing it ESG compliant, ethically compliant, all that stuff. And they'll own the equity just like they own any other equity, but they'll be exposed to the vol of Bitcoin. That's how they're going to do it.
Yeah, I think that I think that people are underestimating how violently institutional capital moves when it moves. We saw this with Bitcoin in 2020 into 2021. There was really a lot of the price was driven by the arbitrage for the Grayscale Bitcoin Trust. I mean, there was just massive capital inflows there. And because that capital couldn't be redeemed, there ended up being this huge price increase. At one point, I think Grayscale was buying like 150% of all Bitcoin being mined every day. Right. So it was just sucking liquidity out of the market. And that was just institutional capital. And it frankly wasn't the big boys. It was hedge funds and family offices, et cetera. I do think that once the really, really large firms, whether it's the sovereign wealth, the large $1 trillion asset managers, et cetera, when they start to allocate, I mean, if you really think about it, right now, if a $1 trillion asset manager said, we're going to go put 100% allocation of Bitcoin, they could buy from a price concept all the Bitcoin that is liquid traded on the market. Now, of course, they can't actually get it because someone's going to sell it to them, but like they have enough money to buy the entire market cap. And so I think people just, they don't understand how much money these people have and how quickly they move.
I agree with your analysis of what happened there. That was not healthy for the market. I preferred more transparency, more liquidity. And I think we're going to get it through, massive amounts of capital going into the equity of miners. That's the way it's going to first manifest itself. And that'll have much more liquidity, much more transparency, much more disclosure, and it'll be compliant. I think it's a trait of 2022. I think you're going to see a bunch of deals announced, a lot of them in West Texas. I'm aware of a lot of these deals, and certainly looking at them, and I'm planning on investing in some of them so I can make claim to owning direct ESG compliant coin. And that's what every other institution wants to do. If you like that video, wait till you see my next one. Don't forget to click right over here and subscribe.